Hello and welcome. How's it going, everybody? This is Chart Request Live. We do this every Tuesday and Thursday at 1 o'clock Eastern Time on Stock Market TV. I am joined, as always, by my esteemed co-host and friend, Patrick Dunawilla of the Chart Report. Hey, Patrick.
How we doing, Steve? We got a ton of requests to get to in the mailbag today, so let's not waste any more time. I want to ask you about your broader market thoughts. We've spent enough time this morning in Spaces and on the morning show talking about that. So let's just dive right into them, shall we?
Let's do it.
All right, let's start off with WDC. This one comes from Frankie in the mailbag.
Legacy Tech. They do, what is it, memory, computer memory?
Yeah, storage,
When you
computer
zoom out
hardware.
enough, you zoom out enough on something like this, it doesn't look great. So WDC relative to large cap technology, right? Not from a relative strength perspective, not something that, really stands out or that you want to get behind. On an absolute basis, if we drill into a daily, I mean, it's not the worst. These kinds of stocks are working, right? Tech hardware. Everybody saw Dell, I think it was last week. So maybe there's something here. Yeah, the fib's not bad. Gives you something right here, logical level. $60. You got the pivot highs from January. I think as long as that holds, this one keeps climbing up the right-hand side of this base that began at 2021 highs. So against 60, target of 78. It's okay.
Yeah, just kind of slowly but surely, right?
Yeah.
One of those
Again,
dinosaur tech companies.
not a leader. It's not beta either, right? Slower
Right.
mover, particularly for its group. But there's something there. It probably at least tests those prior cycle highs around 78.
So let's move on to a little newer tech. We'll do Square, SQ. And
This
we got some comments here. So
yeah.
uh, Square making new 52-week high. What's a good entry? Looking to hold shares longer term, minimum a year.
Yeah, so this is one I've been stalking. I think this is the right way to think right now in this market. This is like an archy name coming off a really ugly bear market, right off the 2021 peak. Probably want to draw an arc here too, just to emphasize that a trend reversal is very much underway. So I think we have two levels here. And this is the exact way I was thinking about it. I almost got long calls yesterday. If you want to jump an entry, because we've seen this pattern, right? Nasty downtrend, 2 years of sideways, big rounding bottom formation. We've seen this pattern so many times. They're resolving higher, on balance, more than on balance. Most of these setups are moving higher, right? And then the path of least resistance is higher. New uptrend is underway. So I think it's okay to want to jump these kinds of chart structures. And I think you could do that right here around 80, 81. You have the pivot highs from December and then last summer. And then you get confirmation, right? And I love scaling in and the idea of scaling in. So I think you could build early exposure here at 81. That would be like the jump it level. And then you get confirmation and you could say, okay, this bearish to bullish reversal pattern has completed around 90. Build the rest of your position. And then in terms of a target, you got this little cluster in the 140 zone, 140 upwards towards 150.
Yeah, that makes sense. Why don't you drop it down to a daily too? You can kind of make a short-term trade out of this one too.
Right here.
We'll like cup and handle almost.
Yeah. 81.
And yeah, it's the same entries, right? But
I think if you're really interested in this one, particularly over longer time frames, you're willing to, wait out whatever potential opportunity cost there is as this one finishes completing the base. I think you could jump it like right here. And then
yeah,
you get that confirmation at 90.
no, I think your point's perfect. Like the structure of it, we've seen these, kind of transitions, almost like a Wyckoff bottom.
Yeah.
Um, we've seen those happen. It might take a little while. You might have to be patient, but this one looks like it's in the process of reversing, right?
This has accumulation written all over it, for sure.
All
And we've
right.
seen so many of its peers, so many of these ARKy stocks already go. It's one of those things, why wouldn't this one follow the same path?
Right. So let's move on to MW or MDU. MDU. M
Yep.
as in Matthew. And over the next 6 to 12 months, natural resources name.
Wow. This is why I love this show. So it is a utility, mid cap, great, about 3% yield. Must be natural gas. Yeah.
There's always these nat gas companies I'm completely unfamiliar with.
I know.
A lot of them out there.
This space is really starting to click. I was looking at Kinder Morgan today. Yeah, this is a monster base, Pat.
I was looking at Cumans the other day.
Cummins?
Yeah, CMI.
Yep.
I think similar, also involved in natural gas.
Look at this base.
Yeah.
Yeah, so really 24.
That's
So
a, that's
again,
a 20-year base. You know, everyone's salivating at the mouth about this 30-year base in Japan, but
yeah,
there's some big ones out there resolving.
we do see these patterns. So Pat, I think like similar to Square, obviously over a different time frame, but there is a jump at level here, right? Like you have, if you were to drill in. So this is the structural trend, sideways for like Pat saying 20 years almost. So if and when it finally goes, called 24, confirmation around 2470. When it finally goes, you definitely want to be involved. If you want to try and get involved early, let's drill into a daily. You have a shelf of old highs right here. So zoom way in. Yeah, 2250. So kind of happening now. I mean, I don't know. Is this too cute? You just wait for confirmation. We're talking about $1.50, right? So it's not really a big deal, but there is a polarity zone here, clear as day. Market continues to tell us that this level is important. We're kind of getting through it right now. So I think you could jump it and then you get confirmation of that, 15, 20-year base breakout closer to 2450.
Yeah, I like that. That makes sense. So
Also,
let's do
as a caveat, yeah, utility.
CRH.
CRA.
Sorry.
No, you're fine. Is this insurance?
It's a materials name.
Wow.
They
Building
construction
materials. I
materials.
should have known.
Hey, have you noticed a lot of these like obscure industrials that are breaking out? It's related to building, like
Yeah.
whether it's residential or
It's been that
so
way.
obviously we're seeing the home builders, but you're also seeing the companies that make the things that they need, the all types of different materials and
Yep.
um,
We've
things like
talked
that.
a lot about how home builders have been the leadership group. Building materials have been too. Um, and they're industrials while the home builders are discretionary. But the charts all look the same, where these were some of the first stocks or first indexes to take out the prior cycle highs here, right? So the shelf of highs from 2021, early 22, took them out. You got a textbook retest, throw back to that level into the October lows last year, and then we've just launched off of this level. Unfortunately, for this one, at least now, I'm not seeing like a clear level to define risk. The next Fibonacci is like 92 and change. To get into something like this, it's high and tight. You got to buy the continuation patterns, and this has one off the breakaway gap from earnings late last month.
Yeah, maybe you could use that low as kind of a risk level, right?
And that's it. The whole gap zone here from that low, the gap, that would be your stop, and you could enter right here out of this flag. and then you would get confirmation at the highs post earnings around 80.
I like it. I like it. We're cruising through these mailbag ones. This is good. And I promise you guys we'll get to the ones in the chat soon, but let's do Merck next. Ah, perfect. Already ahead of me. Wow, look at
Talked
that
about
thing.
this one before. I'm not going
Look
to
at that.
remark it. I guess today, Chart Request Live, the theme is the mega base. So
The mega base. Yeah.
You have a huge base here. Let me clean this up.
The multi-decade base.
In terms of entering here and now, look, if your time frame is long enough, this is a stock that you definitely want to be looking to buy. But entering it tactically, let me just clean this up. I guess maybe a clean throwback to this level here, 118, 120. I think you want to be patient with this one because recently, I mean, just over the past few weeks, don't love it, right?
Yeah.
Maybe let this one come in a couple points more, buy it against these May highs from last year. I like that because this was its own little structure last year that we were drawing and talking about, right?
Yeah.
So maybe a retest of this. Yeah.
Makes sense.
But
So
structurally,
let's move. Sorry, go ahead.
Pat, this is as good as any stock in its sector.
Yeah, I agree. Let's move on to wavies. Are you ready for this one?
Is it a Korean bank?
No, no. Eastman Chemical Company. That's EMN.
Spun off from Eastman Kodak a long, long
Really?
time ago. Mm-hmm.
Remember during meme stock mania when Kodak randomly started rallying for like a couple days?
Yeah, what was that about? So kind of boring, but so is this a materials name?
Chemicals, yeah.
10 Billy,
Oh,
probably a little yield. Ooh, 3.5%, not bad. So look, this is the chart that we've been buying, which is why I like wavy.
I always say wavy knows what we like.
Yeah. I mean, this pattern has been very, very good to us this cycle. I feel like a broken record by now. You got the 38% retracement right there. How convenient. Don't need it, but it's nice. I'm more concerned about this shelf of old highs in the low 90s, right? I think you get confirmation here above the Q1 highs from last year, 92 and a quarter. First stop 107, then you want those old all-time highs, 130. And that's a nice move, right?
So check out the dividends because Wavy mentioned for the rest of the year and collect my dividends. Thanks.
3.5%. I already said it.
Oh, okay.
Yeah. So, but also just dividend aside, right? Which is great. I don't buy stocks for the dividend. Rarely. For me, it's like a kicker. That's nice. Above 92.50, got to be long. The reversal's in. And if you're going to trade it back to the old highs, let this whole reversal kind of and cycle complete and play out. 130, like 40% in a materials name
Pretty good, right?
with 3.5% yield. Yeah. And it's really clean too. Like, you know exactly where you're out. I would give it to the December highs. Little cushion, just under 91.
So I really like this next one. This comes from Dan. He said, I heard you guys like big bases. Check out NTNX for the next 3 to 6 months.
We did this one last week or something. I almost bought it the other day. I was talking to Sam about it. Oh, we put a trade on it in one of our scans. So
What do they do? Nutanix. Oh, it's a software company. I would have thought this thing's like a I don't know, some health food drink.
No, so this is software. I think it's cloud. So I'll never forget when this one IPO'd. It was really hot to be one of these companies, and this was before we had like 1,000 of them. So these guys IPO'd within like the same month as Twilio. And they were talked about a lot for a while, but then Nutanix came out and bombed, and Twilio came out and was like a big deal. And the analyst community just went nuts over Twilio. And then everybody forgot about Nutanix. I didn't hear about it for years. When they IPO'd, though, I'll never forget, I was traveling into the city for work back then. It was one of those companies that really, really spent on their IPO. You know, like sometimes a company goes public and you see it in Times Square.
Oh yeah.
This one, it was that. It was on the subway. It was on the Metro North. Like everywhere you went was Nutanix, Nutanix. Uh,
Wow.
so this is fun. This is, blast from the past a little bit. And the base is enormous. And I love the fact, like I said, sentiment soured on this one a while ago, I feel like. But
Oh
it,
yeah. I mean, it traded into the 80s after its IPO and then went down to the teens or single
yeah.
digits, it looks like.
Yeah, and then it's just been a mess ever since, right? So this is like a forgotten um tech name. If you're above 65 all day, got to be long. First stop 98. It's a great chart.
Yeah, Dan,
Really
thank
good.
you. Dan knows what we like too. Look at that.
3 to 6 months, you play this base breakout. Yeah. That's
Yeah, and it might, who knows, maybe it'll set up and continue kind of basing or
I,
consolidating, giving you more
yeah,
entries.
I will say, and it doesn't mean that it can't work, but if you just look, this year it's had like one down week, the first week of the year. Um, Pretty much. I mean, this streak is ridiculous, right, Pat? This is a weekly chart, but it's
Yeah,
been
that's
really hot. I think this kind of pattern, I don't know if 3 to 6 months is the best time frame for this kind of pattern. What I mean by that is, the run up into here, it's doubled since last August or whatever. Running into some overhead supply here, you tend to see false starts or slow starts, at least a little bit of messiness getting out of these big bases. This is a 7-year base,
yeah,
right? So,
I was gonna say, a lot of the times, we've seen so many of these bases completing recently in the last year, and a lot of the times you're seeing kind of an initial rejection or maybe a false breakout before you get um, the
yeah,
actual trend.
I think this kind of a really structural pattern lends itself nicely to a longer time frame and a more patient investor.
I like it. So this next one from Keisha, we were just talking about this one, and what did I say? I said nobody's talking about DBA right now.
You think she was in spaces?
Maybe, I hope she was. But this is
Pat,
one that I think is really interesting.
want to
And
explain what
look
it
all
is?
the way back at those like 2008 lows.
You want to explain what this is, Pat?
Yeah, so DBA is the agriculture ETF or agricultural commodities ETF. But they hold all sorts of different contracts.
But it's
I'd have
backed
to,
by futures contracts. You're
right, correct.
owning commodities, agricultural commodities.
And how sneaky is that, right? I mean, everybody's looking out for any signs of inflation, all that. Here, this thing's completing a really nice base. What is that going to mean for inflation, right?
Hey, you hear these guys talking about reflation on our spaces?
That's that's beyond my pay grade, but I know enough to ask the question.
Listen, reflation, if it were to happen, this is the kind of fund you want to be buying. And I think you couldn't ask for a cleaner level here than 23. And I think you just want to use the price memory, right? So 23, first stop, these 2014 highs, just above 29. That's it. That's really it. And don't expect, like, we're not looking for a double here. You're invested in commodities futures contracts, right? So 23 to 29,
It's not nothing
25%.
though. What is
Yeah,
that,
yeah.
25% move? Something
It's a
like
nice
that.
base. Again, this is the pattern we keep buying.
Yeah.
It's a good one.
Yeah.
NVO?
So we're almost done with these. We got two more left, and then we get to move on to the chat, the fun stuff. Let's do Novo, NVO.
I can't really help much with something like this as a technician. No, I mean really.
No, you're right.
So I can tell you maybe where you want to be out. I think you definitely want to use a trailing stop.
Would you chase this thing? I know I'm
Absolutely
setting
not.
you up for a slam dunk, but
No, no, never. And you're kind of even based on, this fib. Where do you even fib this thing, right? I'm doing the base that began back in 2015. We broke higher from just post COVID. We're through the 685.4% Fibonacci extension. I mean, these were some of the most hyped, this Eli Lilly, other GLP-1 benefactors, some of the most hyped trades in the market. AI gets, AI gets all the attention. The difference between this and AI is, these guys are making more money selling these drugs, but it's probably worse than AI in terms of the forecasting or the assumptions that are being made about the
Oh,
future.
I hate the narrative that this is an AI-led bull market. I mean, it's a bull market.
I think the gains that we've seen in AI stocks, like we talked about today on Spaces, NVIDIA making up 30% of the S&P 500's earnings growth this year. It's backed by real numbers. The GLP-1
Right.
stuff is backed by massive estimates that these drugs are going to be taken by everyone all the time forever. And
Oh,
I think it's just
interesting.
harder to wrap your head around this story. And there's nowhere for me to define my risk to get into this one. So I couldn't be less interested.
I like it. I like it. Still appreciate those thoughts though. That's still a good answer. MPC, and then we're on to the chat.
This one I like. I would prefer Valero. We are talking about refiners with Marathon Petroleum. VLO, the closest competitor that you'll find to Marathon, and you can really define your risk so well in that one right now. And then you can make the bet that it will end up looking like its closest peer, MPC here, right? So in terms of MPC, like, it's kind of in the middle of a range here. You got the 161 back towards 133. And then if you want like a buy on strength setup, I would use 207. Even if you were to draw a little coil here, doesn't really give us a tactical entry, right, Pat? So let me just show you another option. This is Valero.
Oh, wow.
Clean this one is, right? Another nice base.
I like what you did there to highlight the higher lows. Little
Yeah,
stair step.
yeah. Uh, I don't know what this was for, but you got these prior cycle highs here, right? Above them, consolidating in this range above the 2018 highs. You could just buy this, this is actionable right here.
Yeah.
147.
Yeah, that is a nice looking chart there.
And then you could just measure this out, right? So say you took this from 98 to say 153, 55, tack that on, you're over 200. Just north of 200 would be your target based on the measured move of this, at this point, multi-year consolidation, this consolidation that began in the second quarter of 2022.
All right, this one comes from strapping middle-aged lad. He wants to see CrowdStrike.
I love it, and I think I'm just going to do it because this one just won't give me a chance to get in. I was in it for a trade last year. A lot of times I get in something for a trade and then I buy the common too for something longer term. Didn't do that with this one, and it's just so good. It's so strong.
Yeah, I'm hoping for a pullback to 300 so I can get involved, but I don't think I'll get it.
The place to buy this one was really 100. It's 2019 highs. We came back, we retested them perfectly. I remember talking about it, looking at it, telling other people to buy it. This was in early 2023. Look at you now, CrowdStrike, really emerging as an industry leader in an industry that is hard not to think of as a mega trend, right? Cybersecurity. So here, call it, I don't know, just below 300. It's a range 290 to 300. We got a test. You got this nasty throwback on the Palo Alto earnings, right? Shook lower, below 300. Late February, rebounded, tested again. Now it looks like it's ready to go again. So, buying this as close to 300 as possible, I think, is the move. We're trading around 330 today. Do you see another test? Like I said, already kind of got two just in the past month.
That's the thing. Like if the train's already left the station and if it comes back, there's probably something wrong with it, right?
And as a trader, I mean, these things are so hard, right? And you make mental mistakes. So let's talk about this. See how I have this drawn, Pat? When I drew this? I drew this on March 5th.
Yeah, that was actually our last CRL. We looked at it right before earnings, I think.
Right. So I probably said, oh, I would love to see this one come down and test here, right? And then look at it. The next day it was up 10%.
Yeah.
So these leaders, these really strong trends that they don't give you easy chances to enter. So just get used to that in a bull market. So I think 330 here. I think this level works. And then where would the next fib be? Just for a target quick. I would rather fib it out like this right now.
423. Wow.
Yeah, $423, about $100 north of here.
All right, let's move on to CPNG.
Coupang, love it. Was that
Coupang.
Sam's? I have a feeling that that's Sam.
Yep, Sambo.
Ah. So this is a theme. This is a big theme right now. This is emerging markets, online retail. We're involved in some of these names, right? Whether it's Mercado Libre, now C Limited of Southeast Asia, Coupang stands out. I mean, we have been long Pinduoduo for way too long now. I don't know if we still currently have a position. I don't personally. But Coupang is, I believe, China online retail. Some of these bases out here, like we were talking about this morning, there's just a lot to like. China's been basing as long as any group, right? This is going all the way back to the first quarter of 2022. If this base resolves higher, let's just flip it to a weekly. This base finally goes. You could draw this in a couple different ways too, right?
So it's headquartered in Seattle.
Yeah, maybe. It's Chinese, trust me.
No, yeah, it does mention international there.
I mean, it is so Chinese. Yeah, but no, you go ahead and Google it. Find out for yourself. But the
What was
base,
that? What was that headline about Druckenmiller in there?
yeah, what was that?
Stan Druckenmiller's secret sauce, the two stocks dominating a quarter of his $3
No,
billion portfolio.
can't
Well,
read
I
that stuff.
clicked.
You can't read that stuff. The only thing that you should read on TradingView is the stock market TV article.
So it's Microsoft and Coupang. I guess he's overweight.
You think so?
It's what it says here when I clicked on it.
Listen,
But
Stan,
like you said, I mean, I put a very, very little weight in this.
one of the best ever. One of the best ever. So that's great. So if he likes it, I like it. 20 is that level. The reversal's in. I think you trade it right back up to this shelf if you're looking for a trade. Boom, 30. That's 50% right there. Probably happens pretty fast too. I put a starter position on Baba today. Right? Same theme. Same theme.
I like China right now. I think it's a decent time to be shopping in China. I mean, it's hated right now, so it's hard to buy
Yep.
in terms of getting yourself to pull the trigger.
I'll probably be long this one soon.
I like it. So let's move on to ET.
Energy
That's
transfer.
MLP, right?
Oh,
Or no?
yeah, this will have to be the last one. So ET, phone home. Big yield here. Slow computer today.
Oh, somebody's pushing back and saying it's not China. So we'll have to dig into this a little further.
Southeast Asia. Yeah.
South Korea. Yeah.
China, it used to be organized in China. Here we go. ET, the reversal is in. Draw this a couple different ways. Ooh, look at that.
Is this an MLP?
Yeah.
Yeah.
One of the bigger ones.
You can kind of tell, right? Because they have that sideways, just like kind of flatlining the past few years.
Yeah, I think it's Kelsey Warren is the oil and gas magnate. I think the founder of this one. Big inside buyer too. So 1380 was the last fib. You had some price memory there too. I think that's a pretty good spot from define your risk standpoint. And then next target, I mean, I think you want to let these things run. Energy's kind of picking up momentum again. You're seeing oil services and the explorers and producers try to participate. You know, even the large multinationals, Exxon, I think multi-month highs. So I think you let this one run 20, 33% from here. That's nice. It's going to pay you a monster yield in the meantime. Listen, these are stocks that I talk a lot about, the K1 hating. they're a pain in the neck to own, but I think it's a bull market for energy. I think we've gone sideways in the context of structural bull market. This one's going to pay you over 8% to wait it out. So I think there's a time and a place for these midstream operators that pay these big dividends. And I think right now is that time and place.
I know you said the last one, but if
We're
we could
done.
look at either FXI or XBI.
5 minutes late for my meeting. XBI, IBB, they got to hold these breakouts, right? So draw those reversals. You got a clean shelf of old highs to trade against. We can talk more about it Thursday. We should have an answer then as to whether or not those fall back into the box and undo those nice breakouts from a few weeks ago. Until then, join us on the morning show every morning, 8:30 to 10 o'clock, right here on Stock Market TV. All right, Pat, I'll see you in 2 days.
Cheers. See ya.